we're facing a difficult situation as a country, not just because of tariffs. The context is horrible. Our birth rate has plummeted to less than 1.25. Our mortality rate has risen. Our workforce is aging. Our labor productivity is crashing. Our real per capita GDP is the worst in the G7 and projected to be the worst in the OECD. And now we have all of this. So, with that optimistic note, and I do want to make the point that although I advised 4 prime ministers, I had nothing to do with the current one. All right. I would like, starting with you, Tim, if this goes ahead, this tariff announcement, how does that, in your view, change your corporate strategy on the ground? And I want you to talk about that from the context of not just where you see the market potentially going in terms of price and affordability and customer base, but where also you see from the perspective of a intermediary borrower, what's going to happen to your capital sourcing?
Well, we have a large U.S. parent, so I'm not too concerned about capital source, but I'm concerned about all kinds of other aspects that will influence our ability to lend responsibly and do those under terms that are favorable and profitable. You know, the obvious is there 130,000 Canadians were affected by a steel tariff yesterday. So, you know, that changes the profile of who we can lend to. Auto manufacturing, you know, will run into the exact same supply issues and overinflated prices that we saw during COVID. The difference is with COVID, there was a bridge to cross and we could see the other end of it. With tariffs, we don't know what the other side of that bridge looks like. So, you know, if we have less supply, weaker dollar creates more cars flowing south of the border, you know, at time of trade-in, right? So we'll adjust all of those things to match the marketplace.
John, from your perspective, what are the issues, if the worst case scenario unfolds, what are the issues that concern you most, and what mitigation steps do you think the financing industry needs to take in anticipation? I know that's a tough question because we are in a very era of serious unpredictability.
I guess before I start, first of all, thank you for the invite today, and great to see such a large turnout from all the lending community for auto lenders. So thanks very much for the invitation. So by worst case scenario, you're talking about hundreds of thousands of people unemployed in the country.
I'm talking a full-blown trade war.
Yeah. Well, a full-blown trade war, you know, if I think about it from a lender's perspective and being a large auto lender, you know, we do have a little bit to learn from COVID on how we would perhaps adjust our risk appetite on lending. I think it would be difficult to be very aggressive at all in the space. I think already we're starting to see consumers starting to tighten up their spending. Our economics department just sent out a forecast last night, and even without the tariffs, they're already predicting a reduction in GDP, just because we've already had companies in the U.S. who are canceling contracts to Canada, businesses in Canada canceling contracts to the U.S. So we're already starting to see some of the early signs of the threat of tariffs. So I think it's you know, we're probably looking worst case scenario at a recession in late 2025, and we haven't had a recession in quite some time. I've been around through a few of them. They're not fun. It's difficult on lending. It's difficult on collecting. It's difficult on consumers. It's difficult on everybody. So, yeah, I mean, I'll be sweating a little more, I guess.
Okay. Eric, you are talking to people who tell you what your credit framework is going to be, and you're talking to customers who need capital. What's your view of what we should be thinking about as the new world of what I'll call the Trump version 2.0?
Yeah, it's probably not a lot different than Tim and John. I think the key word is uncertainty, and while the president makes all kinds of comments about tariffs, I mean the industries that he's talking about, it's not hard. Or it's incredibly difficult for him to replace production of some of those things from other sources, and particularly because the exchange rate today, where's he going to get steel at a 38% discount elsewhere in the world that he might have previously sourced from Canada? So I think it's one thing to say, oh my God, there's going to be tariff decisions coming soon. He's got the practical reality of trying to replace that, non-U.S. production from other sources. And while you can drill, baby, drill, you can't, the oil doesn't come out of the ground 10 minutes later. So I think there's a kind of a practical reality. There's also two other branches of the U.S. government that are starting to weigh in, being the judiciary and Congress. And so do I think that the statements he makes will come to pass the way he states them? Not at all. I think there's going to be governors emerge to the kinds of things he tries to implement, particularly under the auspices of emergency orders and the like. But I think the key word is uncertainty. And, certainly, for John and myself, when you run federally regulated institutions in times of uncertainty, you get cautious and you start to protect capital and you start to stick to your knitting in terms of credit appetite, and you don't get out over your skis, certainly like we all might have in terms of loan to value ratios with a very changing value of the auto back in the COVID days. And I think you're going to see lenders naturally learn from those last 4 or 5 years and get really, really precise about where they're going to operate on the credit spectrum.
Okay. I want to carry this worst case scenario just a little bit longer, just because I think it's important that we at least be alerted to it. I would like to hear from each of you on what you perceive will be the impact of the worst case, given the current pressure to let's diversify our trading partners and our supply chains. Let's open up our provincial trading more openly. How is that going to impact the automotive and automotive finance industry, if at all? I understand that we've got issues related to interest rates generally and pricing generally and a risk of a recession. But what's the medium-term game in terms of the next government of Canada, of any party, deciding to diversify our trade and supply chain practices and open up provincial trading borders? Do you want to go first, Tim?
Sure. Well, I think there's a number of things, and uncertainty is kind of the name of the game. Regardless of whether Trump shows up, he's created so much uncertainty. He shows up with tariffs that it's going to have an impact that ripples through the Canadian economy on a number of fronts. So, that instability, the pricing that could come about. There's a couple things that I believe when it comes to Trump. One is, first of all, believe him. Whatever his agenda is yet to be seen. But we have a lot of resources, and we supply 80% of the potash to the U.S., 40% of nickel, 40% of uranium. So we have a lot of levers to pull. So on a greater, more global perspective, we don't know how this is going to shake out. So we have to be extremely prudent in how we lend, who we lend to, that we don't put consumers into positions where it's going to be unaffordable for them, that we control, how we allow consumers to get into some of the vehicles. There is an education component to what we do, and one is don't sell the consumer more than they can afford. So that is something we're discussing quite openly, and we're essentially big data groups at this point that happen to lend money. We're relying on our data more and more to make our decisions.
Okay. John, given that we have this serious risk of a recession, serious risk of a totally brave new world we have to face, if you were advising the Prime Minister of Canada Would
Sounds
you,
like an easy question.
Yeah, do you think we should be thinking about the kind of fiscal stimulus we had to do during COVID, which caused such a big increase in our debt to GDP ratio? Like what should government be doing in your view to be prepared to do in your view to offset the risk in terms of what I'll call the falling rate of Canadian productivity and performance, coupled with all of these external risks coming upon us? What would be your thoughts?
I guess what I would start with is, all of those things. Probably there's a lot of economic data points that have what you call a lag effect. So it takes 2 or 3 quarters to roll through. One thing that doesn't have much of a lag effect is unemployment, right? So if all of those things you're just talking about kind of come into play, we will have very quick impact on unemployment. So we'll have a rise in unemployment. So what does that do from a lender perspective? Depending on who you're talking to, if you think there's friction in the lending process today, it's going to get a lot more difficult to lend, right? We're going to be very specific who we'll lend to. Do they have a job today? Are they going to have a job in 6 months? Like all of those things, if you think about a normal process we do today, how that would look in the future. So the reason I say that is, for the government to want to provide some support to impacted industries, I'm hoping we've got some very good data and we could do some really good segmentation and actually get, some funds to people who truly need it to bridge them from here to here versus the very broad brush approach that was taken during COVID. And to be fair to any of the governments that were in power during that time, it was a very much an unknown thing, right? So there was a rush to get funding out. It's easy to kind of go back now and look in the rearview mirror and pick out all the things that were done incorrectly, but I think there were probably a lot of people that were helped very quickly, and a lot of people perhaps maybe took advantage of it. So I think we have to really keep our eye on unemployment, and then be able to help or bridge the folks that get truly impacted in the short term as fast as possible.
Eric, could you jump in on that?
Yeah, I mean, so if nothing else, the opportunity that's arising out of this from my perspective is it's really galvanized the view of Canadians on a few key issues, one being interprovincial challenges. And while tariffs are prohibited in Canada between provinces, the regulatory environment is still a quagmire and a bit of a mess. And I think cleaning that up, it has to be mission number one. You talk about what advice we'd give the Prime Minister. Well, we all know first we need an actual Prime Minister with a mandate from Canadians. So step number one is to get to an election and get somebody with marching orders from Canadians in terms of what they want and aspire for the country. But I remain optimistic about Canada. We have incredibly bright entrepreneurs. If we could figure out a way how to pool capital more efficiently, lower the regulatory barriers to forming businesses. I saw a stat the other day. We have 100,000 less entrepreneurs in Canada today than we did in 2010 or whatever the stat was. I mean, it's absurd to think about, but it's deeply connected to this productivity problem that you highlight. And if we're ever going to be more self-reliant, it has to come from within, from my perspective. And the real attitude of Canadians around that, watching the last month, I'm optimistic that if we get bold leadership and a mandate, and we get the leaders of the provinces aligned, I think we have a generational opportunity here to actually turn the tide in Canada.
Can I just add
Absolutely.
one thing to that? I think those are really good points. I would just say though, the interprovincial trade barriers and increasing productivity is probably a 2 or a 3 year process before we see a benefit. Like the tariffs, that removing those trade barriers will be a blip compared to what the impact of the tariffs will be in the near term. Right, we have to be aware of that. It's a $35 billion aluminum and steel industry that Canada ships to the U.S. Yesterday it was, Automotive got put back on the table yesterday.
Yeah.
So I think it could be, if those come to pass, short term could be quite
ugly.
Yeah.
Yeah. Well, on that note, what I want to do is shift gears just slightly, because there are those favorite little sayings like necessity breeds innovation, crisis breeds opportunity. If you were to sit and look at the situation that we find ourselves in today and the wake-up call that it has given all Canadians, what would you say would be the places where innovation and opportunity in the car finance and car lending? We just saw an update performance in terms of how the marketplace is operating before this, but I'd like your thoughts on where you see opportunity in the current crisis. Do you want to go first, Jim?
Well, digitization of the process, I think, is a big opportunity, and that is lender to distributor, dealer, and then consumer to dealer or lender as well. So that auto decisioning, is data driven. I think that Canada is significantly behind, and it's not. There is a lack of entrepreneurship. There's some great providers here, but because I have that look into the U.S. market, we struggle to find technology in the Canadian market that can match what they're able to do down there simply by nature of the customization that's needed and the amount of population, right? So certain aspects of that, I think if we can develop in the Canadian lending market, we can avoid, some of the fraud that we're seeing now. I think there's a role to play for all parties involved. Lenders, application aggregators, dealers need to be far more involved in the elimination of fraud and consumer theft, really. So, and then there's government agencies that have mandates to, and they need to start to step up and enforce that. So the opportunity comes from being far more vigilant and bringing a lot of technology into the process.
Would you like to add to that?
Yeah, I mean, what I would add, one of the things I'm watching with interest is, of course, as Trump's, I think trying to reduce the regulatory burden in the States. One of the areas that he's focused on right now is what's called the CFPB in the United States, Consumer Financial Protection Bureau. The Canadian equivalent of that is the FCAC, and of course they're responsible for things like cost of credit disclosure and consumer protection from the big bad banks, if you will. Giggle, giggle. But I think what's happening is, of course, he's trying to make the environment more enabling for providers in the space. But you got other jurisdictions in the world. Of course, the UK Supreme Court's going to hear this issue about embedded compensation for distributors. And I think what happens, whether Trump's decisions in the States cause a ripple effect in Canada and less regulation of the consumer protections, or Canada migrates to where the rest of the world is, the UK, Australia, and others in terms of more protection. But I think that, necessity breeds innovation, exclamation point. I think Dan hit the nail on the head of this shared responsibility between end retailer, manufacturer, and lender, and the degree to which we can really come together and co-create the experience of the future, share the regulatory obligations around transparency and disclosures and those things, and create I think a step change in the user experience. I think that's the opportunity for all of us in the industry.
We're talking here to the automotive lending industry. I want to talk a moment about the automotive industry and just get your perception as stakeholders in that industry. Should there be some sort of shift we're thinking about in terms of what our marketplace is and where it sources its product and how it develops its product? In other words, should our relationships become closer with Europe, Japan, China, in relation to automotive production, the underlying thing? In other words, is the cross-border, integrated, completely tied together supply chain something we've got to begin to unravel? Who wants to go first?
Wow, I don't remember practicing this question. I lived in Windsor for 11 years, and the Chrysler minivan plant at the time had 38,000 full-time employees. The average vehicle crosses the border 7 times from start to completion. So I don't know that you can pull it apart. 38,000 employees, by the way, is bigger than most Canadian towns. So these plant operators are running small communities. I don't know that you can. I think across the board, reliance on our closest friend, for 100 years is starting to be problematic. So I think we do need to look to other nations, other regions in the world for a lot of our product as it relates to automotive. That's a question for the guys in Ottawa, really. But I think if you calculated what is it, 35 billion, 38 billion, the auto trade that flows across the border, something like that. I don't know that you can unravel it, but yeah.
Any other thoughts?
Alfred, for the risk managers in the room, I don't think it's an issue about kind of offshoring or inshoring. I think it's a concentration risk problem.
Right.
And I think the key to economic growth for all of us is better trade, more efficient, less tariffs and those kinds of things. But I think managing the concentration risk that we're living with the outcome today is the downside to what's happened over the last 10 or 20 years.
And I would just add, as opposed to reducing dependency on the U.S. per se and doing more domestically, if I were a business owner, I'd be thinking more about expanding my business to other markets and not necessarily reducing, but just using it as an opportunity to expand.
Okay. And I think the last area I want to focus on today is the whole area of political uncertainty that I'm going to call our domestic political uncertainty that we're currently in. Do you see that as being a persistent problem? In other words, is this something that is kind of, people talk about the new dynamic of American politics. Is there a new dynamic of Canadian politics as a result of how the voter consciousness and focuses have shifted, that has created the kind of political uncertainty here that's going to be lasting, or is this just a momentary blip?
I think the sooner we can get our federal leadership sorted out with either the current prime minister or an election for the next prime minister, to be able to then manage what will be 4 years, I think, of very difficult change to keep track of in the U.S. would be beneficial for everyone. So I think we've got to get our federal leadership sorted out first. But I don't expect the on again, off again, the way things are working south of the border to change for 4 years.
So you do see it as an issue that we've just got to make sure we're ready to deal with.
Absolutely.
Yeah.
Yeah.
Anything to add?
Yeah, I mean, I think, we've probably all watched this kind of polarization in the U.S., and it's not lost on us Canadians. The same thing is happening here. And I'm watching premiers position vis-a-vis the new administration in the United States and how they're trying to build relationships and maybe not doing this in a collaborative, unified way, I don't think is in the best interests of Canada. So to what degree they can get in a room and come up with positions that we can advocate as a country, I think is in all of our interests. And so, I think the next leader of the country is going to have to figure out how to get all of those big personalities in a room and figure out what is the negotiating position of Canada. And there's always going to be compromises and sacrifices with those kinds of things. But I don't think that's different than the last 100 years for our country, to be candid.
Tim?
Yeah, I think, I'd like to say it would only last 4 years, but I think it will extend a little beyond that. And I'm hoping that, as new leadership comes in, they start to understand why there's an interest in putting this kind of pressure on Canada in the first place. And we have an Arctic that we've not invested in, not protected. We have all kinds of resources that can be distributed globally, and we're not doing that. So I think we could bring a lot of stability to the market by, first of all, getting rid of the tariffs between the provinces, which is a very big job. But it's equivalent, I read somewhere, it's equivalent to about a 21% tariff. So, the 25% tariff will be 3 times the shock of when Trump brought tariffs in last time. We can offset that dramatically if we have quick action and a coordinated action interprovincially, but then we have a longer-term plan of protecting what we have and finding other partners around the world that we can distribute to, so we don't have that concentration risk. Because I think with $36 trillion worth of debt, some of the stats you put out about Canada would make everybody sad, but some of those numbers are a lot worse down south, a lot worse. I mean, you talk about Automotive, he wants to repatriate it. If you repatriate it into the Midwest in 2025, they'll have 3 retirees for every new entrant into the workforce. So who's going to produce cars down there? And that doesn't happen overnight. It won't happen in his presidency. So all he can do is move the pendulum, but not actually deliver. So I think we've got to be careful we don't we look for what the real agenda is and start to understand what we have as a nation is extremely valuable and coveted, and you know, it's an envy of the world, right? Like our G7 numbers aren't great, but we still have the cleanest shirt in the room.
We're still the number one.
Shirts.
We're still the number one target for
Exactly.
people across the planet who want to come and move.
Yeah.
Yeah. Well, thank you, gentlemen, very much. I want to wrap up by saying the asteroids may be aligning, but as we said, number one, necessity does breed innovation. Crisis does create opportunity. And I can tell you, as somebody who's been a Leafs fan since I saw them win the Stanley Cup in 1967 on May the 4th, hope springs eternal. Thank you.
That was great.